Hello and welcome everybody. Today we want to talk about bad trades. I know nobody likes to talk about them and most people actually never show them. But as you know, I am the statistical edge guy, right? Like I don't believe in magic patterns or whatever unquantifiable method to win on the market. The way I build an edge is use statistics. And I shared with you my track record strategy. I called it the keep it simple, stupid strategy. And today I want to walk you through a couple trades within that track record that actually did not work out. And I want to walk you through the process of, basically how I did review them and what was the takeaway. Did I do something wrong? Was everything all right? I think that is the most crucial part of being a trader that is successful. The ability to debrief and also as you do it to journal correctly. I'll even show you some pictures of the journal as well because it was a real book at the time. So let me show you. Let's move to the next slide here. So that is the track record that I was talking about. You can see I started this track record for the specific reason to let the numbers speak. You know, there's so many content creator stuff happening on social media. This is an account, and those are real trading results verified by DarwinX. Like basically, it's a regulated entity, so everything you need. And the same type of strategy on a separate account was running also, or is running also on my FX book. And what you can see here, and that is the important part that I want to explain to you. Like this account has been running since November 22. And the point about a statistical edge is that you cannot judge a strategy and also if it's profitable or not based on one trade or a couple trades or a short phase, even if it's weeks. It's very important that you understand that. So here, as you can see, so it started December 2022. You can see like the monthly gains have been all the time positive, really good. And the number of trades, you can see them here, are 2,789 trades. And 81% of the longs were won, 83% of the shorts were won. And that is 20,200 pips roughly. That is pretty good. Even expectancy, which means like an average, every trade profits about 7.2 pips. That's something that you build over time. Obviously, when you do your back test, you should also look into these things so you get an idea as you trade live whether you are in line with your average or not. So it's very important that you understand that. And that's why today I want to talk about bad trades because, it is a nice track record. It's a long track record, and I actually don't know anyone in the education industry that is showing something like that. So let's get to the first trade, which was a Swissy yen. Let me just make my beautiful face a little smaller here. So this trade, you can see I explained the rules of the strategy in another video. I'll probably link it up in the description or something so that you can look it up there if you want to understand how the strategy really works. I showed everything, all the rules, everything of the strategy. No voodoo, no magic, just, statistical proper work and execution. So here we can see that the structure, that is the weekly structure, is actually bullish, right? So we saw that the market was going up. We saw a rejection here, but then it came down. It did not break that low, though that structure was respected. The market went back up. It created a new higher high, right? Then it went back down. It did not break the structure again here. Then it went back up. And I wanted to look for a retracement here in order to take the structure back up. Just simple trend continuation type of trade. Now, if we look at the daily structure, same thing. Again, here we have the resistance level. We saw the market come back down, did not break the structure before. We saw then here, basically the market more or less being supported. We saw that break, right? We came down, we did not break that structure. And here on that retrace, we wanted to enter, or that was my idea to enter, at 171.30, right? I also talked about the round numbers here, the aspect of the strategy. Even on the 4 hour, you can see we did not have a lower low. This level here was respected, or this zone. I talked also about why I use zones and not levels. We also saw that on the 4 hour chart, the price was well trading above the two EMA and SMA. I also explained in the other video. So all in all, the setup looked well, right? So we go even lower now on the 1 hour, and the point was to see like, okay, if we see like a break back down here and respected by this support, I will enter on a retrace. And that was basically this 1 hour candle was the trigger. You can see it has like a long wick. And also more or less trading above the EMAs, even though on a 1 hour they're less significant, obviously. And here's where we entered the trade. Everything was as it's supposed to be. This is considered a really good setup. What happened, however, and let me move this again, the reason I show you this, the chart so long is that that trade went immediately, more or less, into a stop loss. Just didn't work out. It didn't go down too much, and we wobbled around here sideways for about a week, and then actually went up to the target that we had. So in general, the trade idea and the rule set was not wrong. The timing was not really good enough for it, and these things happen. And let me also explain something else here. So what happened? So a debrief, proper debrief. So this was, from the structure perspective, a 10 out of 10 setup. The daily, the 4 hour, the 1 hour, everything was well aligned. The SL, the stop loss, turned out to be too tight. And now you could ask yourself, like, okay, if I had used a stop loss on the 4 hour or the daily structure instead, maybe the price comes back down to these areas here, to this levels, then the trade would have been in. However, then the risk reward for my target would not have been in place. So that's not really a better solution to the situation, right? So I cannot tell myself like, hey, had you used a lower stop loss, this would have worked out. No, if I had chosen a lower stop loss, then my target would have been off. So that's not something that I could have done differently or done better, basically. Now, one other thing I could have done better was once that, because technically, again, if you see here, that we didn't have a higher high on the daily just yet, right? Like we had this structure, then we had the correction, and then we had this structure come up here. So you could argue that I bought one basically retracement too early. If I would have waited for this structure to break as well, and then see a retracement to this level, this would have been a bit more of a clearer or more, let's just say, supporting or confirming the trend in place type of trade. Now, these things, again, look, this is what the discretionary aspect is. And it's important that you understand that these things happen. And that's why you need to check before in your testing and also in your live trading, in your journal, in your real results. How often does this happen? Is this really a representative thing where I should and need to change my rules for? And clearly the answer for this trade is no, absolutely not. The learning is even good setups can fail. And that's absolutely no big deal. Understand that. And this is why a statistical edge is so powerful. Because, you know, these setups, they come and go, and the majority of them, I showed you, 83% of them work out. So why would I worry? Why would I fuss? Why would I be afraid of taking that kind of trade again? I will not. So even if that's considered a bad trade, technically it's just another trade in a succession of many other trades. And I'll show you more trades just so you also get, like, I also have one break-even trade, and so that you see just, you know, the reality of trading is not like in a textbook. And that's why you need to train also your ability and understand the strategy so it works for you. And even this kind of strategy, this kind of trade, it doesn't take you so much time to trade it anyway. The rules are clear. There's nothing complicated going on here. So let's move on.